Now explain credit card expenses and how to manage them. Credit cards. Credit cards in business are commonly used by sales reps or managers to allow those employees to pay for goods or services without the need to carry cash around with them. Many businesses appear to think that if a charge shows up on their credit card, then they don't need an invoice or receipt from a supplier to back up the expense. That thinking is not correct, and the taxman will also correct you, fine you, and make you pay tax because of that thinking. Let me explain. A credit card is like a debit card with one big exception: you don't get credit with a debit card. When you use a debit card, the money usually is taken on the same day or within a few days from your bank account. The money is gone almost immediately. When you use a credit card, you can see the amount being recorded in your credit card account, again almost immediately. But you don't have to pay the credit card company any money immediately. The credit card gives you effectively what is a short-term loan. You may have up to 30 days to pay off what you spent in a month. There's no interest charged on this short-term loan once you pay it off on time. Similar to a normal bank statement where you can see who you paid with your debit card, on your credit card statement you can see who you paid with your credit card. When you pay a supplier with your debit card, it is your expectation to receive an invoice in return. Likewise, when you pay with a credit card, you should also expect to get an invoice in return. The invoice till receipt needs to identify what you bought and indicate the VAT charged on that invoice. This little simple credit card slip is not an invoice. Many people associate a credit card with the ability to pay for business expenses instead of having to carry cash around. They put every charge from small value to big value items on their credit card. While there is nothing wrong with this, some rules should be followed to help manage the card. The credit card is effectively a bank account, so when you pay for something you must get an invoice or detailed till receipt. A credit card only receipt, the ones that just say we took an amount of money from your card but don't indicate what you bought, these are not acceptable. Nowadays, most receipts have the credit card details and what exactly you bought detailed on a combined till receipt and invoice. So rule 1. If you pay for something using your credit card, you must get a receipt/invoice for what you bought. Rule 2. The credit card user needs to keep that receipt or invoice and get all of them back to you at least once a month at a date you, the bookkeeper, need them to be back by. Rule 3. Credit cards have a credit limit. The user needs to stay within that limit, so they should avoid using it for small transactions and try only use it for large transactions such as hotel rooms or dinners with clients. A useful idea is to use the credit card in combination with the employee expenses float and keep large expenses on the credit card and pay small expenses with cash. It also helps the business as there is a cap on credit card limits and your bank see each credit card as a liability to them. Usually a bank has a maximum amount of loan credit it will give to a business. The credit card limits are considered when looking at the overall credit exposure your business has to a bank. Credit cards can also mess with your cash flow. With a credit card, you are building up a debt during the month, which in the case of a business must be paid in full. Defaulting or making late payments on a credit card is expensive, with high interest rates charged for late payment. You need to manage the bookkeeping process for credit cards. You can accrue for credit card expenses each month if the deadline for the month end is too tight to get all the receipts back in time. You can always check online banking for credit card balances at the month end to help work out the accrual amount. A message to the business owner. A credit card is like an open check where money can be spent very quickly and without the need for authorization. Would you give out signed blank checks to the staff of your business and not expect an invoice detailing what they purchased? What you need to do. You need to ensure that the rules of using a credit card are explained to all credit card users in the business. Define what the credit card can be used to pay for example, hotel rooms, business dinners, online suppliers. Define the rules of what the credit card cannot be used for example, drawing down cash or personal expenses. Keeping the receipts in an envelope, plastic pocket or plastic container to ensure they don't get lost. Get the receipts returned to you at least once a month, preferably more regularly, so you can discover if receipts are missing. Treat a credit card as a bank account because it is a bank account and a short-term loan that is repaid every month. It is like a blank check, so always get backup for what it was used for. The taxman will want to see invoices to back up what was spent. In your bookkeeping system, considering setting up each credit card as a bank account in your general ledger so you can perform a bank reconciliation on that statement. By having a separate bank account for each credit card, you can mark how a supplier's invoice was paid and allocate a credit card payment against a supplier's invoice. So set up a credit card policy, and by setting up a credit card policy, everybody will know what is expected from them. The business owner should also get to see what the sales reps are spending their business money on. You, the bookkeeper, will know the credit card date deadlines and can pursue staff who fail to follow the rules. You are now in control of the process. This will help to ensure that you can keep your supplier accounts up to date and be able to perform your month-end routines so that the monthly accounts are completed on time. I hope this has been helpful. Thank you.